I'm starting here looking at my portfolio, and I'm gonna do a technical analysis of a stock. So first we gotta think of a stock or company to look at. All right, let's do Bank of America. So we pull up this, we see how it's doing today, and then we can go to advanced charting, and then it'll give us a more advanced kind of chart that we can look at with all this different uh, stuff on it, the simple moving average, volume, the MACD, earnings, dividend splits. For this, we only really care about the volume and simple moving average, really just the simple moving average, but the volume is also nice to look at. So right now, we have it set for a whole year. So up here we see kind of today, and back here should be about a year ago, so November 5th, 2024. And so this black line that we see is the simple moving average. So it's a lot. You see, it's a lot more steady compared to the blue line, which is the actual stock price. And here we can change the line to candlesticks, and we see um, how the frequency of the trading was for the day, as well as seeing where the price is at. So to get a better look at this, we can zoom in a bit, go to about 5 days, and change the frequency to daily. We should have five of them here, yeah. So change it to hourly. Here we can see it a lot better. So we can see that uh, every day for the past 5 days, Bank of America has been trading above the simple moving average. So it is currently being traded at more than uh, than what the intrinsic price may be, or what the averages of the past 5 days would tell us it should be at. So if we zoom it back out again, let's go year to date, and turn it back to a line, a bit easier to see. So we can see over this duration, the blue line crosses over the stock price crosses over the simple moving average a few times. We can see kind of goes back and forth here at the beginning, crosses over here, then comes back over, and then here does the same thing. When it comes to this, when the stock price crosses above the simple moving average, that is a signal to buy the stock. And when it crosses back below the line, it's a signal to sell the stock. It's kind of just using the averages of the past to give you a rough idea of where the stock is moving and what's the best idea for it. So you see sometimes, like here, it'll go below and then come right back up a few days later. And then you can see it kind of follows that it still is above when it tells you to buy. And then there's also, we can add other things here to the chart. Add the Bollinger Bands, and here we can see compared to the stock price still in the light blue, we can see the mid, lower, and upper places of where the stock they believe would be the most that it should be at, the lowest that it should be at, and then about middle of that where you'll usually find the stock at. But if it crosses above the top one, you should sell, and if it crosses below the bottom one, it's a indicator to buy. And with these averages, since it averages out whatever you put in it, if you change it to just the day, Add back the simple moving average. If you change it back to the day, you see this is how it is now, and it is about $2.50 above the simple moving average. But if I go to the past day, you'll actually see that the stock price is below the simple moving average, because that is just for today. And then we go back, and again, at the bottom here is the volumes. So you see a lot of trading when the stock was real low back in April. There's a lot of stocks were down in April at the beginning. So this can be either people buying the stock while it's low, or selling it if they just really if they thought it was going to go down further. I would assume most of this was people buying the dip. And we also see a lot of trading here. The 19th, that's when it was above, so I would assume that most of that was selling of this stock. So that was a look at the technical analysis of Bank of America stock.